Good morning, everyone, and thank you for joining us for this live Bunker Hill Mining corporate update. Today, we are joined by Executive Chairman Richard Williams, Chief Operating Officer Sam Ash, and Chief Financial Officer Gerbrun van Eerden. This morning, the company provided an updated forecast for mine restart and a revised financial plan. The team will provide further context to this press release, and we'll be having a Q&A session after the presentation. To ask a question, simply write it in the chat box, which can be found in the bottom right corner of your screen. Also, please note that this event is being recorded and will be made available for replay shortly after we conclude. With that, gentlemen, thank you for taking the time to chat with us. I'll pass things over to Richard to kick things off.
Thank you very much, Kyle and the SIX team, and thank you also to all that have dialed in. What I'm going to do is introduce and remind you of to Bunker Hill, and then we'll hand over to Sam Ash and Gerbrun, and we'll have time at the end for questions. But as Kyle has outlined, please, as things occur to you, type them into the chat box, and we'll address them at the end. And I'll be moderating the question period. So with respect to Bunker Hill, I want to remind you of some things. Firstly, we are an American mining company, Nevada Corporation with an Idaho subsidiary, focused on the restart of the Bunker Hill mine in the Silver Valley, Idaho. When this mine restarts, it'll be the first mine to restart in a Superfund site, an environmental cleanup site, since those programs started in 1969, a major ESG and industry milestone for the American industry. And our contribution at this particular moment to the US metal supply chain and also to the development of US mining jobs is significant and strategic. And all of us on this call participating from our side are equity holders, either having invested in their own money and certainly earned equity from their time, are in partnership with a number of others committed to this restart. And I want to list them here. The Silver Valley, Idaho, the great support that they've been providing us. The Bunker team, both the in-house team, which is exceedingly lean, and our many contractors who are patiently and diligently working on our site with a limited amount of resources to deliver this remarkable mine back into production. Sprott Streaming and Royalty Corporation, a faithful and supportive partner through all of this. The new Monetary Metals team, Teck, who will take our concentrate to the Trail smelter and has also provided us the opportunity to use the Pend Oreille facility for our own ends. United States Export-Import Bank and their offer of $150 million of finance, which will be available pending successful application from the end of next year. And the Idaho Department for Environmental Quality and the US Environmental Protection Agency, who set the standards that we must meet and we continually meet. All of these and others are working together alongside equity holders to deliver this restart. It's a complex network of support, as it always is in any operation. Now, where are we now? Strictly speaking, by our Primavera project management system, we're 64% complete. Mechanical installation and commissioning, and Sam will talk to you about this, is starting. Or in fact, the mechanical installation is some way down its path, and commissioning is about to start. 98% of all procurement has been completed, and therein comes the inflation. And we're due to start operations and sell concentrate in Q2 of 2025. So let me hand over to our CEO, Sam Ash, who lives in Kellogg, Idaho, and unusually for the CEO of a development project, effectively lives on the mine site. Sam, sir, over to you.
Thank you, Richard. I would like to start off by highlighting that up to this point in the project has proceeded exceedingly well. In fact, through the end of October, expenditure was exactly in line with our forecast expectations. What we're talking about today is that as we move in to the final stages of the construction and restart at Bunker Hill, the final round of contracting work and proposals, primarily to do with mechanical installation and the tails filtration plant, began to come in, and certainly there was an indication that on a go-forward basis, we were going to see the impacts of a highly inflationary environment that has existed in the United States over the last 18 to 24 months. When that was identified, we initiated a strategic review that we have been working on for the past weeks, focusing primarily on how can we mitigate the effects of upward inflationary pressure and schedule delay caused by the unplanned demobilization of a contractor who is doing the critical first step in the tails filtration construction, which was the installation of the deep piers. What we have found and what we have identified and what we're speaking about today is an optimized plan that, to the best of our ability, is addressing and mitigating the impacts of these inflationary pressures that have come to light in the last stages of the project. All the while making sure that we meet our commitment from an LTO, license to operate perspective, with the regulators, in particular the Environmental Protection Agency and the State of Idaho Environmental Quality. When we look at where is the cost inflation manifesting itself, you will see that in the process plant, we're experiencing inflation primarily related to labor and, to a lesser extent, the cost of cable and piping. In the tails filtration plant, we are seeing the impact, again, of labor, structural steel, copper for cabling, and piping. This, coupled with the delay in schedule, has caused pre-operational CapEx to increase, as well as costs are recategorized from operating costs into pre-production CapEx. What you see here is our revised estimate of the total cost, capital cost of the project. And we feel that these numbers accurately reflect and are almost entirely under contract at this point going forward. From a forecast and schedule perspective, I would like to highlight that the underground and the underground rehabilitation efforts are proceeding exceedingly well. At the moment, there are 5 mining areas that are at ore and ready to initiate production. Additional rehabilitation to support the restart is advancing on plan, and has been adjusted so that the remainder of the rehabilitation and the expenditure of that rehabilitation aligns with an updated restart timeline. In the process plant, by the end of December, we will be in a position to energize the mills, and the mill commissioning of certain systems will commence in January and progress through May of next year, with a mill ramp up expected to take place through the months of April, May, resulting in first concentrate production in June of 2025. Tails filtration plant commissioning is expected to begin in March. And finally, from a value creation perspective, we have some very positive advancements coming in the new year. Firstly, based on the resource conversion drilling that has recently been completed, we will be publishing an updated resource and reserve statement. This is the first step to demonstrate that the 7 million tons of inferred mineralization will indeed convert to measured and indicated and subsequently into reserve at a 75+% conversion rate, identifying that mine life is certainly an upside value creating opportunity at Bunker Hill that we will and are beginning to leverage and deliver. In addition, those that have followed Bunker Hill know that there is an untapped silver potential within the mine. And early in the new year, we will begin the process of beginning to investigate and deliver that upside around high-grade silver that can be brought into the mine plan and into the resource and reserve. We will begin drilling a high-grade silver opportunity that was identified by our geologic team by reviewing historical drill hole databases and drill hole information. 3 months before the mine went into closure in 1981, there was a series of holes drilled, one of which intersected 5 feet of 40 ounce per ton silver. This hole is also surrounded by an array between 6 and 8 additional holes that indicate that potentially there is a new, previously unidentified, high-grade silver vein in close proximity within 200 feet of existing workings in the upper areas of the mine, relatively close to the existing mine plan for mine extraction. As we drill that target, the potential exists to outline and identify a resource and potentially supplement the restart mine feed with a high-grade silver component. Certainly very excited about the opportunity to demonstrate that not only does Bunker Hill have a robust mineralization and opportunities to significantly expand mine life and create value, but also create value through leveraging and bringing to bear the extensive silver potential that exists in this mine. And with that, I'm going to turn it over to Erbrand, our Chief Financial Officer, to discuss financing and our financing plans. Erbrand?
Thank you very much, Sam, and thank you for the opportunity to talk to this forum. One of the main questions that will be on everybody's mind at the moment is how is the team at Bunker Hill approaching this increased financing requirement? And what we are doing at the moment is as follows. Just to remind everybody, is our access to the existing $21 million facility from Sprott. And positive to report is that with the assistance of our partners at Sprott, we have already drawn down the first tranche of $5 million, which was concluded yesterday. Continued drawdowns will be carefully planned over the next 2 months as we progress discussions with some of our strategic partners. Secondly, and more importantly, we have been engaging on an early basis and early on in the strategic review, as mentioned by Sam, with a number of our strategic partners, which will result in either strategic investments, concentrate offtake, or other working capital financing. At this point in time, it's very key to remind everybody of the strategic supply of North American concentrate that we will produce and supplying into the North American markets. And from that perspective, we see a lot of value in the local supply chain. We will also be reporting to the market at the appropriate time as we progress these discussions over the next 2 months, while we are carefully managing and optimizing our spend from the facility. And I think that concludes my financing plan at this point in time. Would like to hand back to Sam for his concluding remarks.
Thank you, Herbrand. And I just want to reiterate that we are on track and we will get the Bunker Hill mine into production. Yesterday, as I do every day, I walked around the site, engaged with our contractors, engaged with our business partners, and I wanted to share with you some of the site progress that I saw, which can be characterized as exceedingly high quality, advancing well, and certainly making progress towards restart. You can see that the conveyor packages that deliver ore to the processing facility and the concentrate to the concentrate storage sheds are advancing rapidly. The coarse ore feed bins are nearing completion. Electrical installations are progressing exceedingly well. And in the underground, you can see the near completion of some additional ground support and final life of mine ground support through the Cape Fault in the underground. So what I want to say, and the message I want to leave, is that the team here at Bunker Hill is fully committed, working well together as a team, laser focused on delivering this project into production in the most capital efficient manner possible, all the while doing this work in a very safe manner. To date, we have not had any serious safety incidents and no injuries reported, which is perhaps the most important aspect of the restart and our progress to date. And with that, I'll turn it over to Richard for any final comments before we move into our Q&A session.
Okay, thanks everybody. Go back to actually no, keep it on this slide. Thanks, Sam. What we wanted to do, and we're going to come to the questions in a minute, but just as you reflect on any other questions you want to ask, what we wanted to describe to you, which we've done in the press release, is what's happened and what it looks like on a go-forward basis with respect to cost and with respect to delays. We wanted to explain to you, and please ask any questions else you want on the why. How did this happen? And then finally, we wanted to be able to explain to you or show to you, what are we doing about it? Noting again that for all stakeholders in this business, including us equity holders, the return on our investment will come from when the mine is in production. And then, as we've said before, we're reinvesting that cash flow in the expansion of the resource, bringing in as much higher grade silver as we can to deliver what we believe is an exceedingly long life, that's multi-decade operation in the Silver Valley of Northern Idaho. So let's have a look at some of the questions here. And I'll run down from the top, and we'll do this until such a time as questions are exhausted. So as we're talking, please, if you've got anything else you want to ask us, this is the opportunity to do it. So as I look at it, first question from George Creasan is the company looking for financing? Yes. What type of financing, Herbrand, Sam, do we think is going to come at the back end of this 21? Herbrand.
Thank you, Richard. In terms of our ongoing discussions, what we can report at this stage is that we've got partners and interested parties currently going through our information on the back of advanced discussions. The format of those and the form of the financing has not been finalized, although a lot of ideas has been put on the table, but nothing moved to a final decision as yet. So essentially what I'm trying to say is that we are pretty flexible. Obviously, equity is really good for our balance sheet with a focus to reduce cost of capital over the next while. We see this as an interim solution up to the stage that we can start initiating or drawing down the EXIM facility that's been made available. Now, that has got a bit of a longer timeline, but at very reasonable terms and pricing, and will help us significantly reduce the cost of capital and our capital structure. So in essence, the answer is we are pretty flexible, but logically, from a cost of capital point of view, we will prioritize the funding mechanisms according to the needs of our balance sheet.
Absolutely. And Herbrand too, we have a number of, as I said to the start, stakeholders here who have security on the asset, Sprott, Streaming and Resources, and Monetary Metals. And how would you characterize our conversations with them with respect to looking at this future finance? And just to sort of load the question slightly, would you say they're flexible, restrictive, hostile? How would you describe it, Herbrand?
To bluntly answer that question, Richard, is that in my 20 odd years in the mining industry and from a financing point of view, I haven't dealt with a more flexible financing team in terms of supporting the project, our objectives, and being flexible in accommodating additional financing, whether it's on a pari passu or a rated basis. All of them are very flexible in terms of discussions and have proven that over the last while in terms of the introduction of a great new partner in Monetary Metals, which has gone side by side and accepted by Sprott, which I think is something really amazing in the financing industry, given the challenges around intercreditor principles and the sharing of security. In our instance, we have been lucky to partner up with these type of partners that's really willing to work with us and have proven that through their actions over the last 12 months, essentially.
Yeah, thanks, Herbrand. I'll just sort of add a little bit before we get to the next question is, for those in the finance industry or interested in the finance industry, to have two parties like Sprott, Streaming and Resources and Monetary Metals negotiate to a conclusion intercreditor agreements in under 4 weeks is pretty remarkable. Our conversations with them at this time, they've obviously been very supportive. They, like we, like everybody, start to really earn money when the mine is in production. And they're very excited about the discussions we're having with other parties that will get us to that finishing line, to this new plan. And so I leave that with you, that very good question, George. We're looking for financing, yes. The form of it is to be determined. The parties to that financing will have to do a deal essentially with not just us, the company, but with Monetary Metals and Sprott, Streaming Resources. We're all in discussions and we're very optimistic about getting ourselves to a solution by the end of January. The next question, Magnum Roofing. And I've got another question here that's been sent in, Magnum Roofing, that asks a very good question. How will we, the company, create value on a per share basis? And just hold that question because I've got another one here. It is, with this fundraising, and if it's $50 million of new debt on top of our $50 million of debt, it's $100 million of debt sitting on a $25 million market cap. What's left for equity holders? In other words, Herbrand, Sam, answer the question specifically with respect to us equity holders. How are we going to start getting a return on a highly levered asset like this as we go into production and then we look out the other side? Herbrand, Sam?
I will kick off from a financial point of view and then hand it over to Sam to look at it from a technical value creation point of view. In essence, we have to reiterate to everybody the following. Tremendous opportunity for resource conversion, which will drive huge incremental NAV increases at very low cost. We are sitting on a developed mine with ongoing rehabilitation to the drilling areas underground. at a very low cost. So from a practical point of view, that is easy to envisage. Exploration success with a limited capital drilling program over the last 6 months have delivered amazing results, specifically a high-grade silver vein that we will be tackling in 2025 already. So from a revenue generation point of view, that is very positive in terms of getting into production as well as servicing ongoing financing. Thirdly, and probably most importantly, is our extremely important support from Exim Bank that we announced a couple of months ago in the term of a non-binding term sheet from them to provide us in total with a financing package of roughly about 150 million. That 150 million has got a splitting ratio in there, but essentially that'll be more than enough to refinance our balance sheet to a cost of capital that will be below market. At that end, I think in terms of those three areas, from a financial gearing point of view, is the objectives and strategy into 2025. Sam, handing back to you in terms of talking about the operational levers.
Yeah, and Sam, specifically, how are we offering upside for the equity holders through all this, Sam?
Absolutely. Look, there's fantastic upside for the equity holders in this project. Number one, look at our resource base. We have a resource base of 14 million tons of total mineral inventory. Right now, 7 million tons of that is in the measured and indicated category, which underpins the pre-feasibility economics, which is the 50 million in NPV, 52 million in NPV that was referenced. That's a 5-year mine life. But to put a point on it, one could, if they believe that 75% resource conversion is achievable, which we certainly do, and expect to start to demonstrate when we put out the new resource and reserve, an updated resource and reserve statement in the first quarter of next year, could look to the PEA, which, with the inclusion of the inferred mineralization at a 75% conversion rate, resulted in a 15-year mine life and NPVs in the neighborhood of $200 million, depending on metal price assumptions that were used. So right there, significant and very real upside value creation potential just from resource conversion at a fairly modest 75% conversion rate. Second, the addition of previously unidentified high-grade silver mineralization. When we're looking at this exploration target that we're doing, it is indicated and suspect that it is a very high likelihood that we will identify and bring into the mine plan in the early stages, pending our success of drilling, silver resource that is orders of magnitude higher in grade than the existing resource. It has tremendous and potentially immediate upside leverage and value creation potential for the Bunker Hill mine. I would also remind everyone to remember that the Bunker Hill mine has produced 165 million ounces of silver in its operating life. And over a 100-year period was able to replace reserves within the existing mine footprint. Our ability to deliver value through the drill bit is expected to be exceedingly high. Secondly, I would say that not only does the Exim finance allow us the ability to bring down the cost of capital, its primary intent is to fund the expansion of the Bunker Hill mine from an 1,800 ton a day production rate to a 2,500 ton a day production rate, significantly increasing the scale of operations here at Bunker Hill and carrying over into both revenue and cash flow generating potential. And finally, just to remind everyone, the existing mine footprint represents around 30% of the entire claim package. And we have identified very prospective exploration opportunities on the larger claim package. The geophysics survey that we have done a couple of years ago indicates the strong likelihood of the presence of sulfide mineralization near surface that could potentially measure in magnitude similar to the mineralization that is known and existing within the Bunker Hill historic mine footprint. So when we think of value creation, we think of it in three tiers. One, resource conversion from the 7 million tons of inferred mineralization into the measured and indicated category, subsequently into reserve, resulting in significant mine life extension. Number two, identification through exploration of high-grade silver that was previously undiscovered and unknown in close proximity to the underground mining footprint, and the conversion of that into resource, reserve, and subsequently into the mine plan. Third, the increase in the throughput from 1,800 to 2,500 tons a day, funded through the EXIM financing opportunity. And fourth, exploration and identification of additional economic mineralization across the larger claim package and mineral endowment.
Thank you, Sam. Thank you, Herbrand. Again, I'm trying to pull together all these questions. Key one is, what type of money and where is it coming from? Second one is, how are we going to get decent returns on our equity investments as the mine restarts and as it expands? I think you've covered both of those well. Chris has asked a question here into why did it take, there's a few on this specialist contractor, why did it take 4 months to announce the walkout of the specialist contractor? What are you doing about it? And just give us a little bit more story around that, please, Sam.
Yeah, certainly. So the contractor who we are talking about actually conducted all of the deep pier work under the processing facility. And over a period of weeks, there were ongoing delays with starting and finishing the deep pier work under the tails and filtration plant. And that reached a point where, because of the potential for schedule delay, we began, while we were working on getting the existing contractor working on the deep piers for the tails filtration, to replace that contractor. And that process took a number of weeks and ultimately resulted in the contractor demobilizing, leaving site, and being replaced with an alternative contractor. The impact for that was limited to schedule, which is a significant impact. But we were able to complete the deep pier installation underneath the tails and filtration plant at a lower cost than the contractor who was replaced. So it was an ongoing discussion, and it was an ongoing process looking to minimize the amount of schedule delay that was incurred in the project. And unfortunately, the final solution that was required was to go and have a different contractor come into place to finish that scope of that project.
Thanks, Sam. But there's a dimension to this too. Is that the question was, why didn't we tell anyone about it? Well, we didn't initially think it was going to be critical, because that immediately initiated a review of our plan to see whether we could, and we put it in our press release, defer the construction of the tailings filter press and then come up with an alternative solution that would reduce the amount of pre-production capital that we needed. In other words, we'd recover the schedule loss and could actually, in the same instance, reduce the total amount of capital. Sam, talk a little bit about that, please. The trade-off studies we did and how we came to a conclusion very recently that wasn't going to work, which is why we took our time to report this. Sam?
Yeah, absolutely. So when the schedule delay became evident, we began exploring solutions to, as Richard said, defer the construction of the filtration plant and handle the tails and the tails process in an alternative way. Now, that ultimately resulted in an outcome that was potentially possible, but was exceedingly risky from an operational standpoint. And on the balance of the details and the recommendations of some very competent technical professionals and technical organizations, the decision was made that the risk associated with that lower cost, faster outcome option was simply overly risky to the entire project success. And so we chose not to go that direction.
Absolutely. I mean, we took it very seriously, as you'd imagine. And when you're trying to balance risk, you sort of say, is it best to sort of go into production with something that's got a very high probability of not working, but say I've achieved construction? Or is it better to go into production with something that we know that can work? Which then leads to, and obviously we chose the latter, which then leads to a question here, which is a good question, by Ren Rutkram, whatever the abbreviation is assuming first concentrate sales at the end of Q2 25, so end of the first half of next year. When can we expect Bunker to become cash flow positive? Great question. It's what we're all focused on. Sam?
Yeah, I think that certainly, as we progress forward and we go and we initiate concentrate production in Q2 through the ramp up process, we are looking and projecting to become free cash flow positive, through Q3 and certainly in mid Q3.
So very quickly, and just remembering on the cash flow perspective, when you load in all of the various instruments, be it streams, be it royalties, and so on, and you're working out how much cash is left over for the equity holders, and the getting into production stage, there's quite a lot of non-equity partners eating that cash flow. And this is where the US Exim Bank is so important. That if 50% of that $150 million can be used to refinance that expensive debt, it's like bringing your debt down from credit card rates down to normal house mortgage rates, whatever they happen to be today, and therefore you've got more cash left over. Everybody understands that, and that's precisely what we're doing. So you'll see through 2025, not just the delivery of the project, which is a great equity catalyst, but also the second one is the safe and secure production. Third is the expanding resources, and then the final one is lowering our the cost of our capital, so we generate more cash. Apologies, I was just distracted for a second. And so that's the sort of package. So I'd say that free cash flow positive, as Sam says, running through Q3, probably more conservatively Q4, but with the effect of Exim and other negotiations, that's another dynamic to think about. But we're very focused on that, as all mining development businesses need to be. If I then go to the one above, because we are talking about value, but we're also talking about risk here, from Michael Harbish. Can you elaborate on the risk of further push-outs to the timeline? What could go wrong from here to further delay? What are the biggest risk factors? Sam?
I think when we think about risk, we think about risk in two dimensions: risk from a cost perspective and risk from a schedule perspective. And of course, those risks intersect on when production starts and when revenue is beginning to be generated. So I'll speak about those in two separate areas. On the schedule side, The critical path of construction is the tails filtration, coupled with the mill commissioning. Now, we feel that the current plan is a solid plan and certainly addresses those risks, but the risk on the schedule and the timeline is around execution, and to a certain extent the performance of contractors that we have performing that work. We feel that we're in a relatively good space. There's certainly risks that and challenges that come up on a daily basis, but I do feel that the team that's in place here is well positioned and able to address and handle those risks. On the cost side, we are now with the most recent round of bids and contractor packages. We do feel that we have captured and have taken account of the bulk of the inflationary pressures and how that relates to the total cost of the project. So from a risk perspective, certainly it's something that we watch and we pay attention to on a daily basis, and certainly have discussions and report and discussions internally on that on a weekly basis in detail. But at the moment, we believe that what we've talked about here represents a reasonable risk profile going forward.
Yeah, and it's interesting from an experience stroke philosophical perspective, and Sam put it right at the start here, and it's very interesting to reflect on this. If you sat and looked at expenditure relative to budget as we were marching through September through to early October, it was only when the engineering was completed and those final contracts were awarded, which was subject to negotiation and competition, that suddenly the go-forward impact of inflation hit us. But we've locked that in now. And of course, there will be some variability that we've got to manage. But again, for anyone watching development projects, and there's not many of them out there, it's at that stage, post-engineering, when you've finally locked in those contracts, that the reality of cost hits you. And it happens at this later stage in a project. And anybody that's done this, from our friends at Adriatic or whatever, all these guys that we talk about, will all talk about that piece on the construction side. The second piece when we look at risk is actually the commissioning of the plant. Now, we've given ourselves, I think, pretty decent timelines for this. And commissioning to ramp up is an area that we take, obviously everybody in development business takes seriously, but just think about what we've got to do. We've got to do the processing facility. We've got to do the tailings filtration plant. The underground is very, very seriously advanced, but all those components have got to come together to the optimal recovery and efficiency rates. And I'd say there's always risk in the commissioning area, and we should all watch that carefully. And I hope that everybody on this call is realizing that we take transparency exceedingly seriously when we're presenting risk and we're presenting outcomes. And the only reason that we've brought this up now rather than a month ago is because the team we had on the ground figured they had a solution that we ultimately decided to reject because it was too risky and went back to the original plan. And again, I just emphasize that point. Right, Jeff Townsend, another one related to, first one related to politics. Given the current market and that you are building one of the very few companies actually building, I'm impressed with how far you've got, thank you. Given the forthcoming change in government, American government, I presume, do you feel, rather than Canadian government, do you feel you have the political support necessary moving forwards? I'll start off this, but I'll hand to Sam. Sam's sitting there right in northern Idaho. I've been in and out of Washington a lot. The US Exim Bank kept me there for a period of time. The current president and the future president agree on one thing, that critical metals are vital to the economic security of the United States. Therefore, they agree, both of them, that the mining industry is a critical part of the fabric of the United States. We're in both of those areas, producing metal that provides security to American economic and industrial strength, and also create jobs. There is a lot of rhetoric out there that the Trump administration can do even more. And we're very excited by that, of course, but we don't drive politics, we benefit from them. And I hope that anybody that's taken a political view on things will see quite the enormous benefit that we have locally within Idaho. And we would seek, obviously, to project that in ways that attracts attention, not just to us, but to the North American mining industry at this time. But Sam, over to you.
Yeah, from a more local perspective, Richard, we have the strong support of the government and communities here in Idaho. The governor of Idaho has visited the site numerous times over the past 3 to 4 years. We have the strong endorsement of the local community, and this mine is, from an Idaho perspective, a very strategic resource for the local economy. I do think that from a critical metals perspective, is that the Bunker Hill mine is truly significant. When you look at Bunker Hill's anticipated production levels and you exclude the supermassive Red Dog mine in Alaska, the Bunker Hill mine will represent right around 10% of domestic zinc production in the United States. That's not insignificant. And I think that, as Richard outlined, it's very much in alignment across the political aisles that the importance of strategic metals and strategic sourcing of metals to the North American economy is gaining more and more importance. And I think that you see that policy discussions are transforming quite quickly into action on the ground.
Thanks, Sam. In summary, we believe we've got great support. Chris Pullman, you raise interesting questions come from your observations. Having followed you from the beginning, it appears this restart is little more than a cosmetic effort designed to make the operation look appealing to potential investors, allowing you to secure funding or sale before demonstrating tangible mineral production. I think that's a bit of a negative way of looking at it, Chris, if I might say. But I'd say that when we came to this at the start, there were two paths available to us. One was to drill, expand the resource, build the largest value through studies, pre-feasibility, then final engineering studies, and then raise the lowest cost of capital to bring that into production. That's a very logical and sensible thing to do. And we'd love to have done that. And the thing that drove us to actually doing an earlier restart was the fact that when we turned up here, we didn't own the asset. We had the option to buy it and to negotiate that down to a price that made sense. But we couldn't do that without dealing with a second issue, was that the previous owners of the mine owed the United States Environmental Protection Agency $20 million as locked into a consent order issued in 2017. $1 million had been paid, and we had $19 million due to the most significant environmental regulator in the United States of America. And the only way we could convince them to reschedule the payments that we had to meet was to say we were going to get into production quickly. And that's what we're doing. Capital markets have not been easy. Much harder than we expected, to be frank, Chris, when we came into this. And it's been a lesson for us all, probably the whole industry, but certainly for us, has really kicked us in the nuts, that. And we're a year behind where we wanted to be, and now we're delayed a little bit more. These are not because of technical issues, Chris. Everything that Chris and the team, Sam and the team are dealing with are well within their competency level and well within any acceptable mining engineering variables. It's gaining capital for a restart project of this size with these metals, an environmental cleanup site at this particular moment in our history has been exceedingly difficult. And it's why I signal and highlight the significance of those partners, which includes all of you equity partners, includes the contractors and the guys on the ground, but really importantly, our financiers, Sprott, Monetary Metals, Teck and others, to get us to where we are now. It's been something short of a miracle. Now we're going to go from here to the finishing line. And the finishing line, I would say to a previous questioner, is 100% right. When are you sustainably free cash flow positive? It isn't just when you've built the mine. It's the next phase that we're going through now. So we're going to raise this money. We're going to get it into sustainable cash flow positive production. We're going to refinance a lot of that debt using US Exim and other means, which is going to maximize our cash flow. And then concurrent and then subsequent to that, we're going to expand the resource. And the other thing I'd say, Chris, is that the team that we've managed to pull together, and it's a general we here, but really that's rallied around Sam in the Silver Valley, Idaho, from people that come from the Silver Valley, Idaho, and come from across America, North America, but primarily the United States of America, is exceedingly high quality. And they're having to work with less money than they would like to solve more problems than they've got hours to solve. But you know what, Chris? They're doing it. And they've got us to this particular point. And we've got to get to the finishing line. So I really appreciate the opportunity to say all that, prompted by your very fair perception. And I hope that I've done it some justice and the team some justice. So with that, eaten quite a lot of Sam's sandwiches there, I want to move on to some more specifics. Bennett refers to what is the grade of the high-grade silver fine? Sam, I think you answered it, but just give Bennett the answer there, please, and we'll move down through.
Yeah, absolutely. And there was a press release that came out on this, a few weeks ago. The intercept of particular interest to us was an intercept that was 5 feet of 40 ounces per ton. In addition, when you look surrounding that, there was multiple intercepts around 5 feet and anywhere between, call it 5 and 10 ounces per ton. But what's interesting is the intercept that was 5 feet of 40 ounce per ton was the only intercept that had 100% recovery through those 5 feet. And the simple answer is that based on the information that we have right now, it appears that there's a reasonable likelihood that a previously unknown and undemarcated high-grade silver vein exists there, which is what the exploration program is going to be testing and advancing.
Thank you, Sam. Again, believe me, we're all looking at that silver vein with some excitement. The next question from Ren Rekram again, I'm going to leave right to the end because it's a great question, which is what reasons can you offer to buy Bunker today? And I'll come back to that. We'll use that as a summary one. And actually, Connor, I'll use that as a summary because what do you anticipate your market cap being in 12 months' time? Again, all refers to why would you buy equity now and what's it going to be in a year's time? Next, Will, optimistic about the team's resilience and unprecedented commitment within Kellogg and its workforce, as I've experienced firsthand during my visit. We're touched by that. Thank you. In addition to the current financial instruments in place for Bunker, would there be interest to consider additional financing tools like a US chartered bank with exceptional benefits, but which include being limited to 100% tax exemption for shareholders and investors? Wow. The answer is quite evidently yes, that however we can lower our cost of capital. We have been looking at the US Department of Agriculture guaranteed loans. Herbrand, can you just talk a little bit about US, and I'm very conscious I'm rabbiting on slightly because we've only got 5 minutes left. Very quickly, Herbrand, what are we doing with respect to low cost, not Exim, but low cost US government debt?
Yeah, so the good news is that we've about a year ago started engaging with the local, what we call the local American financing institutions, of which one is that you're referring to there. We've been talking to the USDA, we've been talking to accredited financiers to the USDA, so easy to try and determine who's the closest around us in Idaho, and have had discussions with quite a few already who is really interested in the project, the progress of the project, the economical rural development, specifically in northern Idaho. So yes, there is a lot of interest, and the closer we get to production, the more realistic those different instruments and financial capabilities and options will become. So essentially, most of these institutions look at operating businesses or very close to operating businesses, and for sure that is something we will readdress the closer we get, or revisit the closer we get to production or in business, or proof of revenue in terms of the first concentrate that will be delivered locally. So yes, the answer is absolutely, and we're keeping those discussions live, and some of them are really, really positive.
Thank you, Herbrand. We have to be a little bit quick through these, Sam. And if it's just when you want to refer to the website, KJH Mining, I think I know who that is. What are the resources in terms of tons, zinc, lead, and silver, ounces of silver, what they currently are? Sam, just give the quick headlines on that, please. I want to get to the great question about why buy bunker in a second. Sam?
Yeah, absolutely. 7 million tons in the measured and indicated category, 7 million tons in the inferred category. Zinc, the percent zinc sitting around 5% zinc, 2% lead, and anywhere from an ounce to an ounce and a half silver.
Thank you. Jakob Jenstad, are the future contractors needed for the restart in place?
The simple answer to that is yes.
Thank you. Good question, Jakob. RR Profili, have you secured your concentrate transportation contractor to Teck and connected, but sort of, is renegotiating treatment charge with Teck an option to raise the 30 million? So transport and potential source of finance.
Right now, transport is in the bid process. There's multiple local options for that, and we'll have that secured over the next, call it, month to month and a half. The treatment charge with with Teck, we're not anticipating that at the moment.
Thanks. And back to the great questions, Rhoda, why buy bunker now? And in the context with, if you've been following the story, there's been delays and challenges and delays and challenges. Is this the time to buy bunker, or should we wait till it's fully de-risked in a few months' time? Are you buying now, or are you buying in June? And why would you buy in the first place? I'll start with Herbrand, then I'll go to Sam. Herbrand?
Yeah, I look at it plain and simple, straightforward. Our PFS 2022 was valued at NPV of 55, just under 60 million. Unfortunately, with a slight dip based on today's announcement, we're sitting at about, to be honest, which is not bad, at a 0.5 multiple. If you look at the factors that we've already discussed in terms of the near mine infill drilling conversion at a really cheap cost, we're sitting with an additional 10 years of life of mine that can be added very quickly and as fast as we can provide the capital for that. Number one. Number two, we've had confirmed successes over the last 6 months in terms of our exploration program. And if we had more money for our very eager exploration team, we see that would have had another massive upside. So we know the tons are there. We know the deposit is there. We need funds to drill it out. The faster we can do that, the better for the share price. Number three, in terms of the capital structure, not unlike any other junior mining company out there, in the mining space, we all are relying on relatively expensive financing, very difficult to obtain. In our instance, as previously and earlier mentioned, we have really close, supportive financiers that's willing to work with other financiers, which is very positive. On the back of that, we've been lucky in a sense, but also due to hard work and persistence, been able to obtain and get the support from Exim. Similar to other mechanisms and institutions like the USDA, local banking partners, we will take this cost of capital down the ladder significantly as we get into production and start proving our worth. In terms of levers over the next while and very soon, being almost, I think, the only developing project that is close to production in the US, might be proven wrong. If I am, I apologize. We are an extremely valuable share out there. I want to leave it at that. Thank you.
Thank you, Herbrand. Sam, again, with respect to the question, it was, do you buy now? Do you wait a little bit later? And what's the value upside, Sam?
Yeah, absolutely. The simple answer for me is I would buy now. You look at what this team has accomplished with this asset that's a truly world-class mineral endowment. 5 years ago, we joined a company that was essentially a dormant company. We didn't own the mine. We didn't have a resource. And we essentially stepped into a scrapyard. Okay, in a 5-year period, we financed this project. We've taken it through the engineering and development stage, published a resource, and are now on the verge of going into production in under 5 years. That is unparalleled in the mining industry, and certainly unparalleled in the United States, where it typically takes 29 years to permit and advance a mine into production. We are on the doorstep, and we're prepared to kick the door down and move forward and get this mine into production. And that's when the real value creation starts.
Thank you, Sam. Thank you, Herbrand. Well, we're going to come close to the end, but I'll add my sort of bit to that question, or a dimension to this question. The fully de-risked position is in some months' time, maybe even a year's time, when the cost of capital has come down and we're starting to maximize cash flow. That is assuming metal prices. But there are a series of opportunities for equity investors from now to then, priced according to risk, which also includes upside, therefore, that should be pretty appealing. But let me come back into the human dimension here a little bit, because you've got a feel for Sam and Herbrand on this call, a little bit of a feel for me. And I want to sort of talk a little bit about the people who are in this picture and who they represent. They represent a team of people who have taken on an exceedingly difficult challenge. 4 or 5 years ago, this operation was dead. It was lying rotting in an environmental cleanup site and owed money to the US government, and no one would touch it. 5 years later, a group of people, mining is a people business, came together and said, we'll take this on, and managed against the odds to raise just enough money to get to where we are now. And now being hit hard by inflation and other challenges that should not just affect us, but affect everybody. But they're not bending. They are equity holders themselves, and they are committed to the safe and sustainable delivery of this project. I have been truly amazed by their courage, their resilience, and their commitment. And I'd say it's quite unusual. And it's earned the respect of exceedingly critical and professional miners and miner observers in the Silver Valley, Idaho. And they deserve it. They deserve the credit they've got at this point. So for investors that are wanting to invest in a financial proposition based on this mine alone, we've given you the reasons. But I'd also like you to think a little bit about the fact that mining is short of two things: not metal in the ground, not permits, all those things can be found. It's short of the right people working together as a team, and it's short of money. Right people working together as a team and short of money. So if you believe that this team that Sam has pulled together and is hanging together in the face of significant pressure is representative of the type of mining company that you want to invest in, that creates opportunities, that deals with difficulties, and doesn't give in to challenges such as those that they're facing now, I'd say invest in the people. There's a lot that will come from them that would not come from others. So with that, what I'm going to do is I'm going to call this webinar to a close. We've done over an hour now. I really thank you for your questions, your attention, your candid observations, your critical observations. And for all of us, and particularly the guys on the ground who are in the arena, we thank you for your support, and we look forward to updating you as we progress forward through what will be another series of difficult challenges to achieve what we've said we're going to do, which is to bring bunker into sustainable and profitable production, get to free cash flow positive, and maximize the opportunities thereafter. So thank you very much, and we'll sign off here. And Kyle, thank you very much for setting it up.